Morning. We are officially live only on onedealaway.com. Welcome to Money Matters. My name is Nev Kraguljevic, and I am beyond excited to be here and to share with you the news when it comes to money, finances, economy, investing, and that kind of stuff. And today we have a very, very special episode. We're going to be focusing on real estate. So if you're a real estate investor, you absolutely, definitely, 100% want to be here, watch and learn of what's been going on around the country. I'm going to visit some reports from Canada, of course, United States, visit some of the largest markets, talk about what's going on with the prices, with the renting. Is it a good time? Is it a bad time? How to think about all of this stuff when it comes to real estate investing in the current situation. So this is what the show is going to be. We're going to uncover a whole lot of stuff, and I think you're going to really like it, especially if you're considering investing in real estate or you have been investing in real estate for a while. So let's do this. And good morning. It is a beautiful Wednesday morning. It is June 3rd, and we're going to go in and spend a little bit of time looking at what's going on in the world of real estate. As you may know, I am very big on believing that real estate is potentially one of the better places where you can park your money and help it to grow and be able to preserve and potentially increase and improve your wealth. However, real estate is very illiquid, meaning you can't just go and buy and sell it that you can with the stock. So it does have some of those risks over there. And when we're talking about renting and using that as a passive income strategy, there are risks about it because your income depends on the ability of your tenants to pay that rent. And now with the unemployment, all of those things, I think it's important to look into this stuff. So we're going to look at some of the reports from different websites, different opinions, different viewpoints, because it's important to understand what the difference is and how people are viewing this stuff so that you can make an educated decision. And then we're going to end the show where I'm going to show you the deal of the week. And I think you are going to like it. So let's take a look at some of the stories from Wall Street and talking about from ice cold to hot. Daily pending home sales in May so far, 15 cities around the U.S. This was done a few days ago, as you can see, and but it's still relevant. The beauty about real estate is that while it does move, it doesn't move as quickly as stocks, for example, or cryptocurrencies, which we're going to cover a bit more in depth tomorrow. So if you're a crypto fan, crypto fanatic, crypto newbie, crypto, we're going to talk about crypto tomorrow. So make sure you come back and make sure you come back and watch live on One Deal Away. Yes, we go live every morning at 7 a.m. Eastern Standard Time. We broadcast live of what's going on in the world. So here we go. Let's talk about it. So National Association of Realtors. Oh, cat hair. Sorry, y'all. National Association of Realtors pending home sales index for the U.S. had plunged as much as 34% in April. Contracts were signed in April and we expected to close over the next month or two. One of the things to understand if you've never invested in real estate is that it's not like you sign a contract today, tomorrow you get the keys. It takes a little bit of time. Sometimes it can take as little as 7 to 10 days. If you're a cash buyer, sometimes it can take months, 2-3 months even, if you're financing and going a bit more traditional way. And now the banks are, while the mortgages are really, really low, the banks are being very strategic about how much money they're lending, whom they're lending it to. They're checking and verifying because they want to protect themselves, and it makes sense. As a lender, of course, you want to make sure that if you lend money, you actually get income back. Same thing is if you buy real estate as a business, as a rental, you want to make sure you get the money back. So you got to screen the the tenants, and you also got to pay attention to the location of where you are buying slash renting slash selling, because real estate is local, and they remind us right here in the report as well. But I want you to keep in mind that just because price is going up in one area, it doesn't mean it's going up everywhere. And even within the same city or state, you could have very different things happening. And we're going to be covering some of those things today. So you're in the right place at the right time if you want to learn and get information about this stuff. So the percentage in red indicates the stage change in 7-day moving average through May 24th this year compared to the same period last year. Sales are headed in astonishingly different direction depending on the local market, from red hot to ice cold with whiplash effect, sometimes in the same state as in Texas. So here we go. Houston, Metro, Texas. As you can see, pending sales, it's actually gone up since April, 24%. The blue you're going to see, that's last year, and then the red is this year. And typically you do see a pickup in the summer months. That's normal for sales as well as for rentals. However, this is an interesting year, and I think it's going to remain interesting for a little while. So here we go. This is what happened in Houston. Dallas was very interesting. It went down, kind of shot up, and then it just plummeted 50%. So we don't know if oil had anything to do with it, but you would think that it would affect Houston a bit more than Dallas. So I'm not quite sure what exactly happened there, but here we are. Jacksonville, here's what's happening in Jacksonville. And not much change since 2019. I mean, we saw a little bit of that dip, but we're right back to where we were. So that's an interesting piece. Tampa, and they're saying they couldn't find Miami, so they're going with Tampa as the sort of next thing. And you can see Tampa is basically up almost 23%. Atlanta is not all that hot, y'all. It's kind of following the trend, but way under. And so this is going to be an interesting piece. And of course, one thing to understand is that when there's a contract that starts in April or in May, it doesn't close until later in May, June, or even July. So we won't get some of that data. A lot of this data is lagging behind. So you just need to kind of understand that piece. Washington, D.C. kind of came back to where the normal was, but it's still down. Philly is down. It went down. It has never recovered. We'll see kind of how it progresses. They are saying that they couldn't pull the data for New York City, so here's Nassau County. And so this is what's going on here. Again, down almost 60%. And we actually have some information about New York City. So if you're interested about New York City, make sure you stay tuned because we are going to be covering some of those things. So don't go away. Okay, so they're saying they couldn't find data for Boston. I don't have Boston today. I didn't take a look into the stuff. I can't go into every market because we're gonna be here for forever. And you're busy. I'm busy. We all got things to do. So, and it's a beautiful day to get very productive. Chicago was down. It kind of is still kind of downish, but it's catching up to where the market was back in 2019. Minneapolis is down 25%. And it will actually be interesting to see what currently is happening, not just in Minneapolis, but when I read Minneapolis, it really hit home because of what is happening with the protests and riots and looting and everything else. And I also want to make sure that I think we should. Again, I'm not an expert in these things. I'm not in every city, but I have a very strong suspicion to believe that the protests are very different than the rioting and looting components. And so there's a lot of peaceful protests which should be happening and are happening. And I think it's important for us as a society to move forward and sort of evolve into a more inclusive environment and inclusive society where every human is equally valued regardless of anything else. But I think it should be set apart from the looting, because I think looting is people taking advantage of what's going on to basically, benefit themselves and sort of, for whatever reason, show their anger in a different manner. So, anyways, it's going to be interesting to see what happens in Minneapolis and also what happens in the other cities because of the current political and social situation that we are experiencing. Denver shot up. They're overperforming over 2019. Let's see, Seattle metro area. It was really down. I mean, you can see that it was down in 2019 in February, March, and then it kind of beat it. But then we saw dip in April, and then we caught up basically to where we were last year. Vegas is down, hasn't really caught up to the thing. San Francisco definitely down, and we have more information about San Francisco coming up shortly. LA is down and kind of going flattish, right? Moving sideways. All right, coffee time. I decided I should have some coffee here with me because every time I can't read, I say I need to have more coffee here to read this correctly. So now let's go and take a look at what's going on with rents. Excuse me. So rents in the most expensive cities drop. And again, there's different opinions, different views, and we're going to cover a few different things so that you can get your own unique sort of perspective. So this was shared about a day later, and work from home folks moving to cheaper pastures. And I think we're going to see some of that stuff, but I think it's going to be interesting kind of how things develop. I have been talking about this stuff for a little while, y'all. I have been talking about the fact that we're going to experience more and more people moving into different workplaces, different environments. I think my sort of prediction was always that one-bedroom apartments and studios are going to pick up because of the affordability. But if the prices drop and more people are working from home, I think we're going to see a shift of folks going from single occupancy, one bedroom and studio into slightly bigger units. So it might be a bigger one bedroom apartment, maybe with a den or something like that, or maybe two bedroom apartments and homes that are going to be able to provide a bit of that office environment where people can work from home successfully. And of course, this is going to start driving people from very expensive markets into cheaper markets. And when you have people move from one area to another and you see a drop in demand, of course, and the supply stays the same, then the prices have to drop. And that's going to happen with the rentals as well as the sales. And of course, we also might see some of the rural areas pick up because people might feel a bit more uncomfortable being in larger cities. And so part of it was the virus. But now, again, with the riots and everything else, I think people are very scared about living in major cities, living downtown, because you never know if the protesters or the rioters or the looters or whomever decides in large groups to start breaking things, setting things on fire, and you happen to live in one of those buildings. And that's a very scary proposition for people that are living there. So I think we're going to see, if this continues, we're going to see even more people doing a mass exodus from some of the most popular places to live, going a bit more rural, going into the greener and bigger pastures, and looking for places that maybe I can't afford 2-3 bedroom home, for example, to buy or to rent, but maybe it has a big enough yard where a shed that I can then really outfit and retrofit, or a garage that I can sort of insulate and make into this really cool, spring, summer, fall working space is going to be a great place to work. And, I'll be very honest, I have one of those things. I end up, now that it's beautiful outside, I work outside most of the time. I do these things, I do the shows inside in the closed environment because of the noise. Because the street is right over there, so you hear an occasional motorcycle or an emergency vehicle and that kind of stuff, and I think that would be kind of annoying to have to say, hold on, pause, time out. So I do this stuff in the indoor environment so that it's easier for you to hear. But then I basically pack up, I put the little backpack, and then I go to my backyard and put the backpack because it's easier to carry all of that stuff and work on the outside. And so many people might decide to do that. But let's come back to this report. In the most expensive rental markets in the U.S., rentals are declining. Zoomper report is showing, and Zoomper is sort of like Zillow-ish, kind of. Go ahead and check them out. You might find that they're very interesting, sort of a new player in this environment. It seems the pandemic has shifted the demand for apartments away from the most expensive cities. More and more companies move into remote work. Many renters don't want to pay the big city price tag. So he's basically the writer of this is sharing an anecdote of kind of talking to Google about some ads and stuff, and he said that anecdotally the sales guy from Google said that he moved from San Francisco Bay Area to St. Louis because he doesn't have to be close to the office anymore because he's working remotely infinitely basically. And he's saying that there's no need for me to pay high rents anymore, and apparently he's not alone because more and more people are going that route. San Francisco remains the most expensive rental market in the U.S., although there are zip codes in Manhattan and L.A. that are even more expensive. In May, the median asking rent for one-bedroom apartment in San Francisco dropped 2.6% from April and produced a 9.2% drop from May last year. That's a pretty big movement. Real estate doesn't typically move this much in this short of period of time, but it's a it's brand new everything, y'all. It's a brand new world that we are experiencing right now. So I think we're going to see this. And yesterday we talked about the whole depression deflation piece. This is also deflationary. When you see the prices, the rentals, and all of that stuff drop, that's also deflationary, as is the savings rate. And there are more and more and more reports coming in that more people are saving, which yet again is deflationary. So another case that deflation is here to stay for at least a little while. San Francisco median two-bedroom asking rents never got back to their peak in October 2015, and in May it fell 1.8% from April. So take a look at this stuff. One bedroom fell 2.6, but two bedroom fell 1.8. This is kind of talking about that piece that we're seeing a bit bigger drops in some of these pricier markets in the smaller units because people that need and want to stay want a bit more space. So we're going to see the disparity. However, that is going to shift and change because as you have folks kind of move in, into these areas of price differential kind of happening, people are going to look at it and say, I am paying like so much money for this two-bedroom apartment, and for 50%, like it has to be a very big difference, but for 50% less, which means it's 50% more of my money that I can actually save and maybe invest in something different to benefit from. Maybe makes sense to move into one bedroom or a really nicer, bigger one bedroom, or a really nice and big studio where I have more places to go in. So I think we're going to see some of that stuff shift. Okay, median rents means half the advertised rents are higher and half are lower. And the asking rent, the advertised rent, is a measure of the current market, not a measure of rents long-term tenants have been paying. So here is kind of San Francisco residential rents, estimated and approximate. And you can kind of see this goes back from like 94, and you kind of see how it went by dot-com peak. Then we saw a 25% drop right after that in like mid-2000s. Then we got the peak over in the 2008 area, right? Then we saw a little bit of down from the crash. But at that time, even though real estate was experiencing crash, a lot of the Silicon Valley companies and startups were starting and really starting to boom because they were starting to get a lot of cash from the VCs and the government because money was starting to come in. And then we just shot up like there's no tomorrow. This is in, what was this, the 2015-16 area, and we kind of dropped down, and it's been sort of going up-ish, but as you can see, it's a much flatter than what's been happening between 2008 and 2015-16. So we saw a drop and kind of going flattish, and I think we're going to see a bit of a drop, if not quite a bit of a drop. In Los Angeles and San Diego and New York City and other expensive rental markets, rents also dropped in May from April. Table shows the 16 most expensive major rental markets in the U.S. The shaded areas show their respective peaks and changes. Chicago and Honolulu are on top with declines from peak of over 20% for one bedroom apartment and over 30% for two bedroom apartment. Again, you see a big disparity between two bedroom and one bedroom, and that is going to be, I think, the story for our next little while. So this is an important piece to pay attention to if you are looking at buying as a rental, right? So you want to pay attention to this stuff. So here we go, the most expensive U.S. rental markets, and you can kind of see what the difference in price is. And you can see that most of them are in the red. There are a few places that are in the green. So Oakland, California went up almost 5%. I don't get it, but there we are. Washington is kind of like flattish if you really think about it. New York City, not much change. And again, we have a bit more information on New York City coming up. You will see that San Diego is up 3.5%. And then we have Fort Lauderdale in Florida and Long Beach, California up by just short of 2%. Denver really dropped, and San Francisco really, really dropped. All right, two bedroom. Let's look at the changes in two bedroom. So again, we are seeing that mostly is red. We are Honolulu. I mean, look at this puppy. Wow, it went really down. Honolulu one bedroom didn't move much, but two bedroom, boy, did it drop. So you can see that there's some areas that are up. Oakland, again, wins in this category, followed by Fort Lauderdale by just short of 3%. All right, cities with the biggest percentage decline in one-bedroom rents. So there are 25 cities among the top 100 rental markets that had the biggest percentage decline. And here we go. The top one is Syracuse, New York, by well over 15%, followed by Durham, North Carolina, and then San Francisco. And you can actually really take a look at what's going on over here. And we're going to scroll down, and Laredo, Texas is the lowest drop amongst all of them. So that's going to be very interesting, and you can kind of take a look. It's sort of all over the place, so it's not just one state, one location. Cities with the biggest percentage increase in one bedroom. So remember, some places are cold, some places are hot, and we're going to take it all of those now. Now here is where the rents are surging, and 25 cities with the largest rent increase among the top 100 rental markets. So take a look. So Cleveland, Ohio, up 16%. Des Moines, Iowa, up 16%. Newark, New Jersey, and Columbus, Ohio, almost 16%, just short of it. Cincinnati, 15.4. St. Louis, 15. Norfolk, Virginia, Lincoln, Nebraska, Wichita, Kansas, Detroit, Michigan, and I don't know why I mispronounced Wichita, but I did. Indianapolis, Chattanooga. I mean, you can see these puppies went up, 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 up. People are moving there, and landlords are catching on, so the rental prices are going up over there. And the lowest one out of all of them is Arlington, Texas, just a little bit over 7%. So you can see that, places are definitely moving. And we saw that Denver, for example, drop, but Colorado Springs went up. So this is one of those things where people are moving. And you'll see these things happening because people are moving out of these really expensive markets into something close by where they can maybe quickly drive or whatever visit, but they're saving up quite a bit. So of the top 100 cities in terms of one-bedroom apartments, 49 experienced year-over-year rent increases, 11 remained flat, and 39 fell. Of the top 100 most expensive major rental markets in order for one-bedroom rents with year-over-year percentage. I have no clue what I just said. I need to keep on drinking this coffee. Below is the entire list of Zumper's top 100 most expensive major rental markets in order of one-bedroom asking rents in May and year-over-year change. So here we go. You can see that these are the top most expensive. San Francisco, we're not shocked, followed by New York City, Massachusetts, Boston. I'm putting a whole Massachusetts in that category. Yikes, sorry about that. And you can see the changes of one bedroom and the year-over-year change, and two bedroom right over here. And you can see that where it might fall one place, it might go up in another place. So this is an interesting thing to pay attention to. So Oakland, California, Washington, D.C., and we can scroll all the way down of kind of where we are with the most expensive. Again, you can definitely look at the stuff on Wall Street, not Wall Street, Wolf Street. And the cheapest one of them all is Akron, Ohio. One bedroom median is 580, but they went up 7.4%, and 720 for two bedroom up by 1.4%. All right, so we've talked about the. We're not gonna actually go into this stuff. I think we've covered San Francisco quite extensively, so we're going to skip over that stuff. But here we go. What has been happening with the pending sales and stuff? So we covered a little bit of that stuff, and I talked about the pending sales have an impact of what happens in the near future. So pending sales of existing homes of all types in April, contracted houses, condos, etc., they were signed in April, but they haven't closed yet, collapsed by 33.8% from April last year. Uh, that's interesting. So you can kind of see this. Look, I mean, this shows a very clear picture of what has happened, and we've never been at these levels, y'all. I've already talked about this stuff maybe about 2 3 weeks ago. We didn't do it live like this. I just did one of my walk and talk videos, which you can find on my YouTube channel. So feel free to take a look at that stuff where I talk about the whole like what's going on and the fact that we're going to experience big moves in real estate. Pending sales are indication of what closed sales will look like in a month or two down the road. So this is indication of the direction that May's closed sales are heading into. We already discussed that. Pending home sales for March had plunged 16.3% year over year. Closed sales of existing homes in May might be down by 30% or more year over year. And we are talking about the different sort of what's happening with the pending home sales index by region. And you will see that the Northeast is definitely winning, but it was also hit the highest with the pandemic. And like I said, current social unrest, so to speak, is also going to drive a lot of stuff on the real estate. And I think we're going to experience some major changes as well in the current month, which is June, which is also going to impact July and August. So something to look for and watch out for. So Northeast is down 53%, Midwest 26%, South almost 30%, and West 37%. So when sales volume collapse to this extent, no matter what the market is, it changes everything. Market has essentially frozen. And, they're basically looking and saying, here's kind of what has been happening. Of course, the real estate has moved a little bit into the technology spectrum by doing virtual open houses, which people didn't do as much before. The technology existed, we just never used it as much. I remember back in 2014, 2015, when I was requesting to do a virtual open house and kind of visit a place that I was looking to buy from far, far, far away, because it didn't make sense for me to fly over to take a look. So I asked realtors. Out of 12 realtors that I had connected with, only one said, sure, let's do this. So, and I ended up actually purchasing the home, and there's a whole story and saga about that one. But in the end, it turned out just fine. So another problem that we've experienced in real estate is mass layoffs by big companies, and those are being announced all the time. And it's not, at first it was just the service jobs, which are typically lower paid, but now we're seeing, airlines and travel companies and oil companies and tech companies and companies. Everybody is cutting. And so these are the jobs that come with good paychecks and benefits. And this constant flow of announcement does two things. It creates uncertainty amongst the buyers, but also the mortgagers, and they're not talking about it here, the mortgagers, and then also sellers, right? Because it's a big uncertainty for everybody, so everybody's just kind of holding on to see where things pan out. The gigantic unemployment crisis is basically happening with the tsunami of bankruptcy filings. So we're watching these large companies lay off, go into the bankruptcy filing, lay off even more, and in case of Hertz, give bonuses to their executives. We've covered that. Again, I have my opinion. Clearly, is very obvious. But there's more layoffs, so it's sort of a downward cycle that at some point is going to slow down and stop. But I don't see it happening anytime soon. The job losses will end as more workers will return to work and unemployment will start to rise, but I don't think that is going to be happening at high levels. Issues around keeping buyers, sellers, brokers, others safe, right? So that's one of the issues. And of course, the people who return to work after sitting unemployment cannot instantly turn into home buyers because it's hard to get a mortgage. Banks are not as easy to lend, not lending money as easily. And of course, right after you're being unemployed, you can't just go in and get that stuff. So some volume will pick up, but we won't see a normal levels coming in. All right. So here we go. I made a promise that we're going to cover to what's going on. Hold on, let me zoom in real estate in New York City. And so let's take a look at what's going on in New York City. So what's been happening in New York City? Real estate in 5 boroughs are down 53% in May year over year, followed by 61% plunge in year over year in April. So there didn't appear to be many homes up for sale, and we've actually seen an 86% decrease in April of from the listings that are added in April 2019. The massive drop in inventory shows us that the majority of would-be sellers can wait. Driven sellers, however, weren't afraid to lower their prices in April. Manhattan down 2.7%, Brooklyn down 1.8%, and Queens remained relatively flat. And it's interesting that they mentioned 5 boroughs, but they only report on 3. So I have no clue what happened with the other 2 because they didn't report it. It's weird, but that's where we are. The first half of May, so noticeably stronger sales trends. Median sale prices in May also stabilized, 2% gain over the May of 2019 median price. But by the third week of May, the real estate market began to slow down again. So less sales coming up as well. Rents, however, appear to increase across the city. Manhattan rent index rose 2.5%, Brooklyn up 4.8%, and Queens up 3.2%. So there you go. You get to understand of what's going on in the real estate when it comes to New York City. Now, let's take a quick look at what's going on over in Canada, because we do have some viewers from Canada. We do have some folks who are thinking about investing in Canada because, we're neighbors and it's easy to go from place to place. So let's cover what's happening over there. Okay, so TREB is the Toronto Regional Real Estate Board. So they're basically reporting a little bit over 4,600 sales in May of 2020, which is down 53.7% from last year. Decline was less than 67% than it was in April. So we're a little bit of closing of a gap, but I wouldn't call it really a closing of a gap. I mean, 54% and 67%. Like, those are big drops, y'all. Those are really big drops. Sales were up substantially compared to April, and May 2020 sales increased by 55%. Number of new listings was down by 53%. The housing sector will be a key driver of growth as consumer confidence increases and few households look to take advantage of very low borrowing costs. And real estate market is a very, very important concept to take a look at because, people own homes, people rent homes. We all need to have a place to live. And so this market is very, very huge. Just like unemployment numbers are important to look at, just like people look at the stock market and evaluate economy. And now we all understand that stock market is not economy. It's completely separate things, and the market is fake. But, you can have your own opinion. That's mine. The MLS Home Price Index Composite Benchmark price was virtually unchanged in May 2020 compared to April 2020. On a year-over-year basis, the composite benchmark was up 9.5%, and the average selling price for all home types combined was up 3% as compared to the May of 2019. One-bedroom, two-bedroom condominium apartments rental transactions were lower in May 2020 compared to May 2019. The number of one-bedroom rentals was down 30.8%. Yikes. The number of two-bedroom rentals was down by 26.7%. And home sales, there was a marked improvement in rental transaction between April 2020 and May 2020. So there you go. And then they list a bunch of like the tables if you want to take a look at the stuff. I'm just going to scroll down very slowly because there are folks that want to take a look into this stuff. Of course, you can pause, snap a photo if you want to evaluate this later. But this is basically what they're reporting. And now that we are finishing with this portion, we are going to go into something that I think I'm going to do on weekly basis, that I hopefully you will enjoy and like, and that is going to be the deal of the week when it comes to value properties. So when it comes to what's happening in the they call it the distressed market. Sometimes the property is distressed, sometimes it's not, but it's called the distressed market, and it's also known as the off-market listings because it's not listed in the MLS, and your realtor does not know about it. But before we go there, I just want to sort of recap of what we're seeing. We're seeing that the listings are down, prices are starting to go down, up and down. They kind of change, and the rentals are starting to go down in the highest markets, and we're seeing that happening all over the place. US, Canada, I'm pretty certain. I haven't done the research for some of the European or Asian cities, but I'm going to assume that is going to be a story around the world. So I do expect real estate to go down in prices, and I do expect that that's not going to be like for forever, but in a relatively speaking short time period over the fall, winter, and into 2021, I think there's going to be some amazing deals to be had. And so I'm going to keep on looking at that stuff. Of course, I'm going to be reporting that here at Money Matters, and you can watch and should watch at onedealaway.com/live, where you can actually ask questions and we can interact if you want to. If you don't, that's okay. You can always just put in the comments, and I tend to check on those relatively regularly, and I will respond. So now, the moment you've been waiting for, and that is, I have found a property that is listed for just short of $30,000 that I think you are going to enjoy seeing. So let's take a look at what in the world did Nev find. So here we go in 3, 2, 1. There we go. So I have found a property that is listed for $29,490 at an auction. This is being sold by the government, and so and I will show you kind of where it's located. So let's take a look. This is basically a photo or the image of the property as taken by Google, and you can see there's not much happening over here, but look, the neighborhood is actually quite lovely. Quite lovely. So the property could use a little bit of TLC, clearly, but it's not like in disarray. Like this is an easily fixed thing, and I'm gonna exit this stuff just so that you can kind of see where it's located, right? Let's take a look at this puppy right over here. So we're located about 30 minutes outside of Sacramento. So that's a pretty easy commute, and you can and should do your own due diligence and research. But what I like about it, when I took a look at the stuff, and I'm like, it's not that amazing until I went and checked out Zillow. Now the estimate they're saying is just south of $500,000, so just short of $500,000, which may not be 100% accurate. Right? So you got to do your own little bit of due diligence, which you should do it all the time. But we get more information about what the property is. So you can see that it's a 4-bedroom, 2.5 bathroom, over 2,000 square feet. And you get to see that, it was built in 1972. The estimate is $489,398, which has increased by $7,000 in the last 30 days. That's because people are moving out of Sacramento into local neighborhoods. Remember, we just talked about it. We talked about this stuff for a reason, y'all. The rent estimate of this home is $2,300 a month, which has decreased by $6 per month over the last 30 days. So that's an interesting piece to pay attention to. One of the things that I found really interesting when I took a look is, wait a minute, this puppy has a pool, and then I said, why didn't I see that? And then because then I zoomed in. Hold on, let us zoom in. Got to drive it, and yeah, look at this. There's a pool. There's a pool. So for $30,000, right? You have an opportunity to purchase a property that has 4 bedrooms, 2.5. I don't know how to do a half with my fingers. 2.5 bathrooms, a pool, a bit of maintenance and a bit of things. It looks like it has solar as well. And, you get to do a little bit of like fix up and stuff, which could be very easily done. And you get to buy basically $500,000 property. And if you don't want to live in it, you can rent it. So if we were to do a little bit of math, right? Let's do a little bit of math. Let's say I can, I end up renting this puppy. What did they say rent was? And again, I know it's not 100% accurate, right? $2,300 a month times 12. That's a rent of $27,600. I'm using my handy dandy phone / calculator, right? You can see it right over here. So basically, if I can purchase this for $30,000 and then rent it for $2,300 a month, I recuperate almost 100% of my investments. 100% of my investment in 1 year. After that, pure profit. Pure profit. And of course, you can buy this, you can refinance, all of that stuff. All of that stuff plays the part. And, this is one of those things that I keep trying to hammer home to folks. You got to learn how to find and evaluate these things because this is the most amazing find ever. You're able to buy $500,000 home for, I don't know, $30,000, put an additional $10,000, $20,000 to like really spice it up and, rent it, refinance, resell, do whatever it is that you want to do and be able to make some mad money. If you don't know how to do this stuff, but you want to learn how to do this stuff, you have a couple of options. You can do it by trial and error and get yourself in a really deep doo-doo and lose a lot of money. I've done that. I won't lie. Or you can sign up for a course called Flip It Online Masterclass that you can find on onedealaway.com. So that's one of the ways that you can learn. Or we are promoting now. We're actually starting to go through and doing a thing called One Deal Away Academy, where you can take all of the different courses that we have, including Flip It Online Masterclass, including Real Estate on the Cheap Challenge, including the crypto course that we're creating, including the money management stuff, including all the different things that we're going to be building for one super low monthly subscription price, where you can cancel anytime you want and you get all of these amazing things. And so if you want to learn, and I think you should learn, that's just my personal opinion, then I invite you to check out onedealaway.com and /academy. That's an easier one to spell than Flip It Online Masterclass. But, if you just want to take the masterclass, you absolutely can do that as well, or you just want to take a challenge. So take a look at what we have, and then, of course, get whatever it is that you want and need. But this is the part that excites me the most. When people talk about real estate, everybody's doing it the traditional way. And the part that excites me the most is ability to do something like this. So I hope you have enjoyed it. I hope that you were really excited about taking a look at this property. Again, $30K, and there's no guarantee. Of course, there's no guarantee that you're going to be able to buy it for $30K. But even if you buy it for $50,000 or even $75,000, I think it's still worth it. The part of the risk that we don't know about this one is we don't know what the inside is like. Right? But, it's one of those things that you take a little bit of a risk when you do these things, but your reward could be through the roof. So just something to consider potentially when doing these things. So I hope you have enjoyed it today. Please do make sure you subscribe if you're watching this on YouTube, or better yet, come over to onedealaway.com/live tomorrow at 7 a.m. We're going to be broadcasting, and as I promised, we're going to focus a bit on cryptocurrencies tomorrow. So if you're a crypto fan, crypto fanatic, crypto want to learn, join me tomorrow where we're going to discover some news and different things when it comes to this amazingly new, exciting asset class that is still developing, growing, and disrupting our entire world. Thank you for watching. Until next time, stay forever money blessed, and do remember, you are only one deal away. Bye, y'all.